Hey guys, thanks for tuning in. Before we get into today's episode, be sure to click on the link below to find out more information or to schedule in a time to chat about your property needs in more detail, and be sure to hit the subscribe button. Home ownership rates are dropping around the world, and in most areas it is getting harder and harder to buy your first home. With property prices as high as they are, many first home buyers are only able to purchase a property with help from family. In this guide, we run through 5 common ways you can support your kids onto the property ladder. Consult with your lawyer and mortgage advisor before deciding which option might be best for your situation. 1. Gift part of the deposit, most common. The stumbling block for many first home buyers is building up the deposit required to obtain finance. They may have enough income to service the loan but are struggling to put together the down payment. Option 1 is to simply gift them the amount they need to top up their own savings so they can secure finance approval from the bank. 2. Lend part of the deposit, similar to option 1, but in this case you are lending your family member an amount to top up their deposit. You might choose to offer this loan on interest-free terms with no repayments, or you could choose to charge a nominal interest rate, comparable to what you might get if the money was on a term deposit at the bank. Either way, this option helps you protect the money in case of a relationship breakup and ensures you can ask for the money to be paid back to you in the event the property is ever sold. 3. Guarantee part of the loan. Banks will often let you guarantee a small amount of the loan, that is 20%, and that can be enough to help your family member secure mortgage finance. With this option, your liability is limited to a smaller amount than the total mortgage. The key here is to make sure you have some funds available to cover the payments on your guaranteed portion of the loan in case anything goes wrong. 4. Buy the property with your child. Add your names to the deed or title and enjoy shared ownership of the property. This may be necessary if your child can't secure finance from the bank on their own, but have the ability to pay back the mortgage. This could occur if they have a fluctuating income or are going to rely on flatmates to cover the cost. You could look to switch the property completely into their name in future once they can secure a mortgage under their own name. 5. Buy an investment property in your own name. Lock in a home at today's prices, even if your child isn't ready or able to buy yet. If your income and equity are strong now, you may choose to grab a property while you can, with the long-term goal of passing it on to your child or letting them buy it off you. This is a great option if your child is still in school or still a few years away from being in a position to buy. In this scenario, look for a property where you can add value, which will further increase your equity and make it easier for your child to secure finance against the property in future, as the deposit might already be built into the value of the home. Make sure you choose a home that you are happy to hold on to or sell, whether your child likes it or not. It should stack up as an investment property either way. In summary, if your kids are struggling to get on the property ladder, there are numerous ways you can help. No matter which option appeals to you, just make sure you consult with your lawyer, accountant, and mortgage advisor before going ahead. Get in touch if you are thinking about helping your loved ones into a home, and we can put you in touch with our recommended mortgage advisor. Once you have your finance sorted, we can help you find a home that will be a great asset to your family for years to come. If you would like to discuss further with us, click on the links below our video to schedule in a time, and don't forget to hit that like and subscribe button.